Hi everyone, I'm Michael Ruger. I am the managing partner of Greenbush Financial Group, and in this video we're going to be covering the new 2021 child care tax credit. And this is different than the regular child tax credit. So two separate things. So the regular child tax credit is that $2,000, $3,000, or $3,600 for having just children as dependents under certain ages, where what we're talking about here is the child care tax credit, which is reimbursing you and providing you tax credits for certain expenses that you may have paid for children that are under the age of 13 during the tax year. There have been some really big enhancements to these tax credits for 2021 because they recently passed the big stimulus package, the American Rescue Plan, in March, and that increased both the amount of the expenses that are eligible for these tax credits, as well as the percent that you're reimbursed for these qualified expenses. First, let's cover who's eligible for these child care tax credits. So any parent that's under a certain income threshold that we will cover that had a child that was under the age of 13 for the entire tax year. So if they turned 13 during the tax year, they would not qualify. So it's children under 13 and you had qualified child care expenses that can be reimbursed by these credits. Also, if you had a spouse or family member that you are claiming as a dependent that has a mental or physical illness and lived with you for more than half of the year, also qualifies for this type of credit. Before I get to the income thresholds for the parents, let's first talk about the amount of these tax credits. And the easiest way to do this is to compare what we had before in 2020 versus what they changed it to into 2021. So in 2020, if you had one qualifying child under the age of 13, you could apply for $3,000 worth of expenses, and they would multiply that max $3,000 times 35%. That was the amount that they would reimburse you for, which equals a max credit of $1,050. So that was the max credit you could have gotten in 2020. In 2021, with the pass of this new stimulus program, they increased the expense amount from $3,000 to $8,000 that are qualified expenses. And the reimbursement rate, instead of 35%, is now 50%, making the max tax credit for this being $4,000 for one qualifying child. It's a huge increase in the amount. The other really big thing that they just changed for this child care tax credit in 2021 is they made it fully refundable, which it was not fully refundable in 2020, which means in 2020, if you had a $500 tax liability, but you had a $1,000 child care tax credit, they would just wipe out your Fed liability, but you would lose that extra $500. In 2021, if you have a $500 federal tax liability and you're due a $4,000 credit, they will wipe out your liability, plus the government sends you a check for $3,500 because it's now a fully refundable credit. That first example was for one child. So what if you have two or more children under the age of 13 during the tax year that you have these expenses for? So in 2020, again, it was a lower amount. So the max expense was $8,000 that would qualify, and they would multiply that by 35%, which is your reimbursement, which works out to a max credit of $2,100 in 2020. In 2021, they of course increased that and to saying the max qualifying expense is now $16,000 and it will be max reimbursed at a 50% rate. So that equals a $8,000 tax credit for taxpayers that have two or more qualifying children this tax year. Now that I've explained how those credits work, we can now go back and talk about the income thresholds for the parents to qualify them for these types of credits. So again, I want to compare 2020 to 2021. So in 2020, remember I said the max reimbursement rate was 35%, but that was only for taxpayers under a certain income threshold. Once you get over a certain income threshold, that 35% starts going down. And for 2020, if you made $15,000 or less AGI, then you qualified for the full 35%, but then it started slowly working its way down to eventually, once you got to $45,000 in AGI, which is adjusted gross income in 2020, then you got down to the floor amount, which was 20%. So again, if you had, let's say, $1,000 worth of childcare expenses and you made over $45,000, then you only get a 20% reimbursement. So you get essentially $200 back based on that $1,000 expense. This leads us to the next really big change in 2021 with this new legislation that they dramatically increased the income level for parents, allowing more parents to qualify for the new max 50% reimbursement for those child care expenses. And in 2021, the level is now $125,000 AGI, adjusted gross income, which on your 1040 for 2020 would be line 11. That $125,000 threshold is for all filers, single filers, joint filers, married filing separately. They are all the same regardless of filing status. Let's recap a lot of these changes in just a real quick example. So if I'm a single filer who makes $70,000 per year and I have one qualifying child, so if I have a child that's 8 years old, under the age of 13, and I had $1,000 worth of childcare expenses for the year that qualify. So if I was still in 2020, I would get that $1,000 times just 20%, so I would have gotten a tax credit of just $200. Now that I'm in 2021, because now the phase-out threshold is a lot higher, I qualify for that full 50% reimbursement, so that $1,000 now gets times by 50%, so I get a $500 credit for that same $1,000 worth of expenses now that I'm in 2021. There is unfortunately some bad news for high income earners with these changes that they made to the child care tax credit. So in 2020, regardless of how high your income was, there was always that 20% floor that you could always qualify for based on how many qualified children you had in the house. Under the new changes that they made to the rules in 2021, that floor actually begins to phase out at 400,000 AGI, and at 440,000, you have completely lost this child care tax credit. A very important note about these child care tax credits are you have to legitimately report the expenses on your tax return that you paid when you're actually claiming these tax credits. So what that means is if you had your kids home during COVID or they were hybrid and you had someone coming into the house that was watching them and you were paying them cash and they may or may not be reporting that cash on their tax return, that could be an issue trying to qualify for these credits, because when you file your tax return for 2021, you have to file what's called a 2441 tax form. And on that form, it asks you to list the name or organization, their address, and the social security number, and the amount that you paid that person for the child care. And that's what the IRS uses to say, did that organization or person report that as income? So if you report that as an expense, but that person didn't report it as income, the IRS might try and match that up and it could create some issues. So just be aware of that. This is one of the many tax changes that are out there for individuals and family members going into 2021. We have videos on the stimulus tax payments. We do have separate videos on the child tax credit, which is again separate from this child care tax credit that we've talked about today, as well as the tax-free unemployment benefits. But I put links to all those videos below, and please subscribe because we'll keep you up to date as we get additional guidance from the IRS on these various tax programs. If you have any questions, please feel free to reach out to me at moneysmartboard.com. Thank you.